Hi everyone, thanks so much for joining our September webinar. Really excited about September's webinar. Not only is September Life Insurance Awareness Month, it also seems to be the month when everyone sort of gets back to business or in full swing. Now this summer was particularly busy for us, and I think as an industry, I've heard from a lot of people that this was a particularly busy summer, so maybe people not taking as much time off. But without further ado, again, we're going to get to the topics of this month's webinar. And I think we have some really nice topics lined up for you. Now, again, we focused pretty heavily on term this month and term conversion. Again, September being Life Insurance Awareness Month, it is a very popular category of insurance, and it's going to be something we can either go to new clients with, younger clients with, or even existing clients and show them the options. So our first topic is going to be term versus time, and I just really want to show how you can position different term products to really help highlight some of the pros and cons depending on what our client's time frame is. And again, when I worked with my stepfather, one of the big questions he would ask his clients is, when do you want your insurance to end? And it was a very important question. It's very simple. When I think about it, of course, everyone thinks, well, I want my insurance to end when I die. However, they don't necessarily realize that a lot of forms of insurance are not going to be in place. So he would always ask that one very simple question: when do you want your insurance to end? Especially when doing a term conversion or something where we're looking at permanent product. But I'm going to show you how to position term over different time lengths and how some term products are going to make the others look great, and how when we extend that time, they may not look as great. Now, the next concept we're going to focus on is similar around layering term over time. We're going to show you how to maximize coverage and minimize cost. And this is really, a solution for clients, and maybe a majority of clients who have changing needs over the time that they're going to hold the insurance. So we're going to make a layered plan, but instead of using any whole life or participating insurance, we're going to layer term products and see how affordable we can get this coverage, because cash flow is obviously an issue for a big segment of clients out there. Next, we're going to illustrate the value of a term conversion, and we're going to take one of these existing policies. It really doesn't matter how old a policy is. I mean, a person's age is really the value, but we're going to show the value of a term conversion at any age. So hopefully we'll have time to do a couple of them, but we'll do one for sure and show you how we can set up a term conversion off some real renewals, actual existing policy. And then we're actually going to use that term conversion example to set up a term conversion email campaign. And I've got a free template for anyone who would like one. Once you see it, again, you can always give us a shout through the usual channels: Charlie at Life Design Analysis, info at Life Design Analysis. Get in touch with anyone on the team. We can help you out with that template. We'll also get to some housekeeping and updates for the month as well. So without further ado, I'm going to go to Life Design Analysis. And again, this is just lifedesignanalysis.com. For those of you who are using the software, you're already familiar with this. For those of you who haven't created an account before, certainly sign up free. There's a 30-day free trial with no credit card on sign up. Again, we're going to help save time, increase sales, and hopefully make you more compliant as well. Now again, this is a web-based software, so I can, of course, log in from any different device and access my cases and create new cases. Okay, so our first concept is term versus time, or when do you want your insurance to end? And what I'm going to do is I'm going to set up a brand new case here, and I'm going to make a new client. And I will just call this client term and time. Now, of course, you'll use this with your real client's name. And I want to set them up. I'll pick 1977. I'm going to pick a 40-year-old client here. But, of course, this is sort of a concept that would work with any given age. And I'll pick a male. Again, all I have to do is save my client here, and they're in the system. I can make as many different cases on this client as I'd like, so I can do different scenarios. All of those cases that we create are also going to be saved. So what I want to do is I want to set up a comparison here that's going to just highlight different products. So a lot of times we as advisors, maybe pick a certain product that we know is good for our clients, or we make assumptions on what they have the affordability for, but we never really actually know. So giving clients options is always a good idea. Giving too many that overwhelm is never a good idea, but people like more than just one option. So sometimes I find like 3 or 4 different options is the sweet spot, but we'll build a case out here and compare $1 million of insurance. So I'm going to take $1 million here as my face value. Put it in there. Now again, what I'm going to do is I'm going to search the market for term 10. And so I'm going to hit plus term. And I'm using our LifeGuide integrated rates here. Again, if you're not familiar with LifeGuide, it's a service that it provides multiple quotations. They feed us all the information on all the different carriers in Canada. If you are a LifeGuide subscriber, you get a half price discount to Life Design Analysis, and having both tools is obviously very beneficial. What I'm going to do here is search the market for 10-year term, and it's going to give me a listing of all the different companies that I can select from and add to any given case. And when you do add to the case, again, all of those renewals and all of the premium information is put into that case. So I'm going to add this with the guaranteed renewals. You can also illustrate these though as a reissue. And again, this our system will basically assume good health and add a disclaimer saying the client must be healthy, but show it as a reissue. But in this case, I just want to add with the guaranteed renewal. So I'm just going to click add to case. Now again, if I was just looking at term 10, again, the survey itself pretty much tells me the most affordable plan out there, but I don't necessarily have to use multiple term 10s. What I want to do is I actually want to set up a comparison that looks at term 10, and I want to compare that, the one term 10 product to a term 20 and really show, by comparison why the term 20 is better. So I'm going to repeat this, and again, I'm doing this very granular so I can pick these companies selectively. You can also use our recipe. So I could go T10 versus T20, 10, 20, 25, 10, 20, 30. And again, once I click this, it'll just select the lowest price out of a certain company, individual, or again, your preferred set or all companies out there. But again, I'm going to do this very granular so I can say, okay, let's add a term 10. Now let's compare it to a term 20. And again, what we'll do here is say term 20. And I'll search the market. And I can add one of these products to the case. Again, we can see all the way down the survey, and we can add any different product. So you can see we also show you how much different a certain product is than the next. And again, I don't necessarily have to pick the highest price product for this particular concept to work. Really what we're showing is that by locking in for a longer length of time, we're actually going to save money. And what we really want our clients to think about is, when do you want your insurance to end? Now, if this client was 40, their insurance may end here at 20 years because they'll never pay that renewal. They might think they will, but they probably won't, in which case they have to assume that at 60, they're going to be healthy. And so we want them to think about, when do you want your insurance to end? And if you want to guarantee that, what would you do? So let's just take a quick look. I'm going to go down into my report components. You can see here, again, our software is going to automatically default this to the longest length of product, focusing in on that time frame. So that's fine. I'm going to look at 20 years. I don't necessarily need all my report components for what I'm trying to illustrate here. So I'm actually going to deselect all. I am going to put my cover in there, my mission statement. I want my plan details, and I just want my sum of premiums, because I'm going to be focusing on a cost comparison in this particular chart. But I also want, again, my contact details. So again, I'm just going to pick the selected metrics that I want and hit Generate Report. Now, with this report, again, it's going to be generated with your logo, prepared for the client. So it looks like you've spent a lot of time before you even get to the meeting. It looks like you've spent hours putting together a detailed proposal. Again, this only takes seconds, and the impact is huge for a client because, again, already you look like you're going to take care of their needs. You're prepared. You're very professional, and that's really a big impact of our report. Not only do you get to research the market and present those options, but you have something to hand to the client that really makes you look good. Now, again, I'm just kind of going by our mission statement here. That was one of the pages I picked because I wanted our disclaimer to be in there. But again, what we're going to have here is a presentation summary here of all the different products that we're going to add to this comparison. Again, I've just got 2 here, but we're going to add a few more and layer them. And what we do see is, again, that premium schedule. And this sort of concept that I'm referring to is called asymmetrical dominance. So sometimes by having something in there, it makes, a higher price can make this one look a little bit better. So if I just said 621 versus 1,120, we might gravitate towards the lower one. But because I have this renewal coming in here, again, I see the value of locking in for this longer period of time. And as I said, this sum of premium chart is one of the best ways to really illustrate a very, all these different calculations and different sums and products and patterns that they follow in a very simple visual. So again, as I'm the client, I can see if this is my cost here, or my sum of premiums, anything I've deposited into the plan, would you rather be the blue line here or the yellow line. And again, very simple visual. Visual says 1,000 words. People understand visuals that much quicker, and that's why our software is so effective with your clients. They really appreciate the fact that you've simplified it, but you're still using very exacting numbers. Again, I can see, I definitely want to spend less on my insurance, and a nice contact page. Now again, you can always go back to this. I might also add in a table, which is called our presentation summary. So again, I can always go back to the report and add in any other report component. And this one I also want a presentation summary, and it's just found right here. So I'm just going to click off that table. Now, the other thing I want to do while I'm here is I want to add another length of term. So this is a great term 10 versus term 20, but as I said, this client who's 40, probably needs insurance at least till 65. I mean, that's generally when people think about retiring and say, maybe I don't have any liabilities other than perhaps final expenses, but I'll have saved enough. So even for those clients, we want to show them term products that fit their time needs. So again, I'm going to do the same thing, and as I said, I'm going very granular. We definitely have a recipe here that would do T10, 20, 30 all at once, but I just want to show you how these kind of charts evolve as we add different lengths of term and compare them over time. So now I'm going to pick a term 30. Now again, keep in mind, this works with any length of time. So even if you're doing term 10 versus term 15, it's still a great comparison. The term 15 is not, sometimes it's only a couple dollars more per month, but the benefit for the client is that they see that value over that 15 years. And again, what we're trying to do is pair these term products with our client's time needs. Now again, this one for this 40-year-old may just be retirement or something like that. Again, they may say, I don't need permanent insurance, I don't need cash value, but we want to help them find a term product that fits those particular needs. In this case, I'm going to use an SSQ term 30 plus as my term 30. But really what I want us to look at is as we add a different term product and look at it now for, as we can see here, 30 years, again, I want you to take a look at that sum of premiums chart and see how when we match term products to our clients' needs, some of those ones that seemed affordable initially can provide, sort of that asymmetrical dominance to make those ones, that fit the time needs that much better. So again, cover page, and we can always evolve these reports, so we could add permanent products into these. You can do, really whatever you'd like in there and compare, multiple different carriers, all on one page, all consistent font. We've got nice details about the products. And again, we've got now a lot of numbers here, but really, again, that one simple visual that I want to show here is, what does it cost? When do you want your insurance to end? So do you want your insurance to end at 60? Not likely, especially if someone answered, well, when I die or when I retire. Again, do we want our insurance to end here at 70? And if it does, if 70 is the answer or if retirement's the answer, we want the most affordable coverage. And that helps them see the benefit of a certain length of product matched their time. So by asking one simple question, when do you want your insurance to end, we might be able to better, fulfill their needs. Now, one of the other products that I think is really interesting in this space is a term to 65. And I'm not sure in this case if it's actually going to outpace that term 30, because that actually does take us right to 70 years old for a 40-year-old client. But perhaps even someone younger, if they were looking at, term 10 for a house or something like that, or just starting in the professional world, we might want to consider a term to 65. So let's add that in here and just see how that would work for this particular client. So I'm going to say level term to 65. Now, when I search this product, some of you may go to search level term to 65 and not find any results in there. There's a number of companies that do offer them. Manulife is very popular for there, so I'm going to add them to the case. But I'll show you a little trick in the account settings when you're specifying life guide rates. Because a term 65 is not considered renewable, sometimes it will not show up in the survey. So just keep that in mind, and I'll just quickly pop to that. Actually, I'll show you right now, just in the account settings here. A lot of times in your life guide settings, you will have filter out non-convertible and non-renewable products, renewable and convertible there. So sometimes the default is filter out non-convertible and non-renewable products. And just because that term 65 is just a level term, it doesn't actually technically renew and would get filtered out. So you may just want to make sure you have all products in the renewable and convertible area there. Now, again, we've got our case. Okay, so we've got our case here, and I'm going to set the analyze to age as 70, but of course you could always push this out to maybe show a few more of the renewals on, say, the term 30. But again, I think this one's going to be relevant because that's going to take us right to the end of the term 30, and I'm really curious to see if this term 65 is actually going to be a better option, than the term 30. So let's generate the report and see. Okay, perfect. So we've got our report here. I'll skip through our mission statement. Again, this is an area where you can customize all these different aspects, so if you do work in a particular market. And again, here we can see term 10 versus term 20 versus term 30, and a level to 65. But again, as I said, the visual is so critical. Let's skip down to the sum of premiums to really look at what is the best option. And again, this is a very interesting comparison because, again, we've got two really good options if our plan is to retire at, say, 65, or if we're thinking we don't need insurance. Again, we can see these prices are actually very close, but with the term 30, again, it's going to hit the renewal mark here, but if we actually lapse it at 70 there, again, we're going to have two really good options. But the T65 is actually quite affordable, which I find is quite nice about the plan. So again, when we're asking our clients, when do you want your insurance to end, some of them may say when I retire, and this makes a great strategy of term products to present. And again, even if you do add quite a few, like I might just leave this at 3 different products, but again, the interactive nature of our charts means that you can quickly turn on and off different options. So again, if they immediately think, you know what, forget that term 10, or that term 20 spikes up at age 60 and I don't know if I'll be retired, again, we could start analyzing these two different options. And again, it's sort of that, as I called it before, that asymmetrical dominance or the decoy effect, that but when one thing looks really expensive, it can make the others look more affordable in comparison. And again, thinking about our clients' needs and what their goal is, and in this case we've kind of said it might be retirement, but whatever it is, we've given them some options to solve this goal, and they can choose the product that they think fits the time needs. But likely if I saw this report as a consumer, I'd be now trying to decide between which of these two products do I need, as opposed to I'll just take that cheap term 10. Now I really don't want this one that was the most affordable to start. So that's term versus time, and again, I really want you guys to think about that when you're presenting. Again, feel free to use the line, when do you want your insurance to end? Larry, my stepfather, would often wait several minutes and for the response to, well, what do you mean when do I want it to end? Well, of course I want it to end when I die, and that's a certain type of insurance all into itself. So let's go into our next concept here. And again, we can actually still use term versus time again on this particular client. Maybe not one or the other product is exactly right for the client. Maybe it's a combination of all. So what I'm going to do here is, again, I'm going to create a new case. And if you haven't used our side shortcut bar, again, these come up when you move your mouse to the side. They're just quick shortcuts to add a new case, go to the cases that you have, go to the clients that you have, or even pop back to the very last case you were working on. Now, I'm going to start off, and I'm just going to pick a client here. And again, I've got term time as my client, so I can use this, again, knowing that a 40-year-old is going to be good for this next concept. Now, what I want to do is I want to make a layered plan for this client, knowing that maybe term time is young now, cash flow is really, really an issue. They need high coverage initially, lower coverage later, and there's some plan to retire and have a little bit of permanent insurance in place. So what I'm going to do is I'm going to layer a number of different insurance plans in here. So I'm going to say we need $100,000 of T100 insurance. So I've got $100,000 in there. What I'm going to do here is, usually when I do this, I do a minimum funded UL and I search for rates. You can still do that in that case. The advantage there is we can always add cash value. We also have our classic Term 100 products as well. So you'll see there is a Term 100 as well. And that's really the difference between min funded UL in our system and Term 100, is that you would go into term to find that Term 100. And again, you can see all the different companies that offer this. Now, what I'm going to do is I'm just going to pick this Industrial Alliance T100, and I will add it to the case. I may even take away names altogether at the end. You may want to use one single company all the way through just to make underwriting easy. But the concept I really want to show is that we could use a little bit of every different product to make something that's affordable, but also has a substantial benefit. Now, I'm going to say, because that last T65 was really, really affordable, I'm going to say let's do 500,000 of T65. So again, I'm going to say term. I've just changed the insurance benefit there. So you can change in between searches, and what it will do is it'll actually, again, add each individual plan and note that, that renewal period and insurance benefit as well. And again, I'll add a little bit of this one. So I'll take the term 65 here, add that, and I'm going to add about 200,000 of the remaining. So I'll take 200,000, and this is where I'll say, and you know what, in this case, I'll even just add a recipe, and I'll say 200,000 because I'm doing T10 and T20, and I'll search for both of them at the same time. Now in this case, I might, I think Manulife will come out as the top T20, but I'll just put Manulife and add both of their products in there. Again, it doesn't really matter if you have a preference set. I mean, it's always good to look and research the market and find the best products for your clients, but again, keep in mind conversions and other options and things like that too. Now in this one, I don't necessarily care about the order, but I could always switch these around, because what I'm going to do is I'm going to use our little combine plans, and each one of these is going to be a little bit of a layer. Now, the other thing here is sometimes when I'm layering products, I don't want this T10 to show that renewal, because that whole affordability aspect of it goes down. What I'm suggesting in this sort of concept is that I want the coverage to lapse, and that's going to be my needs changing. So in 10 years, I don't need quite as much because I've paid down, maybe it's 200,000 off my house, so I don't need to insure against that. Maybe I've built up some equity, maybe I have some investments, whatever the case being. You can go into the edit plan, which is this little blue crayon or pencil icon that can change any details of the plans inside of LDA. And what I'm going to do is I'm just going to change the renewable to age on this. So if my client's 40, I'm just going to say I only want this one to renew till 50 in 10 years, and I will save that. Now I'm also going to do the same thing with the term 20 and repeat that process. This time though, again, because my client's 40, I'm going to say let's renew this one till 60. So again, you can control when these renew to if you don't want to see some of those guaranteed renewals in there. And I find that always works well in a layered concept because, again, we are adjusting for the insurance benefit for a changing need. Now, after I've got my plans kind of set here, again, T65 doesn't renew and T100 is all the way good to 100, I can go ahead and combine them into a single plan. Now, again, if you were doing these all with one company, there might be a multi-policy discount too, so you could also combine with a multi-policy. For me, I'm just going to say 1, 2, 3, 4. Going to add these all together. And once you've checked off the ones you want to combine, just click this little save combine to finish that step. So to basically save and say, okay, these are the ones I want to sum together, combine them all into one new plan. When we do this, we get basically all 4 titles here combined with a plus in between them. You can, of course, change that. However, the other thing I like to point out, and it may not be obvious on a recording depending on your screen, is that these ones are grayed out or hidden. So even though we've made a brand new sum of all those plans, we keep the individual ones if you ever wanted to change any of the underlying assumptions. So for example, if you wanted the T20 to renew, any change you make down here as far as when it's renewable to will be reflected in the combined one as well. So it's basically live summed. And I'm just going to edit this plan name for simplicity and just say this is a layered term strategy. And again, I might add if it was for a client, I'd recommend you add a description or some kind of, something that talks about why you're using this particular concept or why it's so good for their particular needs. Again, any kind of detail really helps in that presentation. And I'll save that. The other thing I'm going to do is I'm going to customize certain report components. So again, I don't necessarily need annual premium and sum of premium. So I'm going to get rid of sum. All I'm going to do is talk about the total annual premium each year if I'm doing just kind of a showcase. There's no cash value in this one, so I don't want to show that. I don't really need these. I mean, these ones only show when 2 plans are present. I don't need this one. I do want the presentation summary, and I'm going to get rid of a few of these other ones. I don't necessarily need to look at IRR. Maybe if we're dealing with a CA, we might want to look at equivalent IRR. But for the most part, I'm just going to clean up a few of the report components, go up to the top, and let's generate our layered term strategy. Okay, perfect. So we've got our secondary report for term versus time. Maybe this is even an iteration. We presented different options and the client said, hey, I want all of them, or I want a combination. Can you make the premium more affordable? And again, what we're going to see here is, for the first 10 years, that's where, because we have the most amount of coverage, that's where we're going to see the biggest premium. But again, at the 11th year, because we lapsed that term 10 coverage, our premium is going to fall by the amount of the term coverage. And you can see it wasn't all that much that it fell, but again, $200,000 of term for a 40-year-old is not all that expensive. Again, at the 20-year mark, we can see the premium further drops to $1,700. And again, that's because that term 20 has fallen off. Again, that goes from 21 to 24 years, and that's basically when that term 65 expires, leaving us with that $100,000 of permanent coverage, which is only going to cost us $940 every year. And again, when we look at our annual premium, or our premiums as we go, we can actually just show you over the age, of our client. Here's the different cost patterns, and actually see that, at age 99, we would stop paying. But again, very affordable coverage. You may want to compare this with any other product or a different layering strategy. That's one of the beautiful things about that combined plans, is that you can do, maybe a different mix of layers, or maybe a little bit favored on the permanent side. So again, feel free to play with those layers and even compare them against each other. But this is really the chart that I'm looking for. And again, it really just shows how much coverage we can have in the short term. So you can see we have a full $1 million of coverage, but look at the red. Look how little we're paying for $1 million of coverage over these critical ages. So again, if we're dealing with a client who's 40, this is generally when people are starting to get protected for kids. They have houses, they have, definitely a lot of human capital because they have a lot of years ahead of them, but cash flow is certainly a criteria. And if we can show them, look, we'll give you $1 million of coverage when you're 50, you've paid enough off your house, or you've had enough equity in it. Again, by the time 20 years is up, we can drop that again. You've paid off even more. By the time you're 65, mortgage is gone, and we want to be left with some final coverage for final expenses. And again, just showing you've had all that high coverage all the way along, and we retire, and we've got $100,000 of kind of final needs coverage. But again, look at the affordability. I mean, we've paid very little for covering ourselves with $1 million of insurance, and $800 following. Again, total over the course of this client's life, they'd have spent $80,000. And again, that's really beneficial for someone with cash flow needs. So we can show them how affordable it can be. Now, our next concept, so I'm going to again set up a new case. And I'll set up a new client for this, because I've actually pulled, and I'll show you the screenshot here. This is what we used to do. We'd take, again, an actual renewal schedule. So I've got this one as a monthly renewal schedule. You can see that this client, their date of birth was 26 November 1974. So when I create my new case over here, I'm going to say new client, and I'll just call this Nick Test. And I will add a birth date. And I think I said November. I may have to go back and look. November 26, 1974. November 26th and 1974. Perfect. And this one is a male. And I am going to save this client. So we've got our test client in there. I took away all the names, obviously, and we will hit continue. Now, this person is actually 42, age nearest 43, and November is coming up. I guess September, October, November, we're 3 months away. So I mean, if you did want to backdate this one to age 42, just go to this client age override here and just type in the age you want to search from, or override the birth date. But do keep it in mind, we will show you the age nearest. All of the rates that I'm searching in the future are going to be off this age nearest unless I override it. Now, just coming back to my screenshot here, this is the current policy. So you can see it's $250,000. It was issued in 2005. So this is getting up there. And this is 10-year term. It's renewable till 80, convertible till 70. At the time, this looks like this was a new quote for them of T10. So this was just a replacement for a younger, again, we could even show them, why you would re-up on a term. In this case, we're going to go back to them and say, maybe they didn't go with this strategy. They've still held on to this one. We want to show them this policy versus a new one. So what I'm going to do is I'm going to come back here to NIC test. Again, I'm going to throw in my insurance benefit here, $250. And the first thing I want to do is I want to enter in that renewal schedule that we were just looking at. Now, what I'm going to do for entering an existing policy, again, because we can't use those searches, we're going to do a plus manual. And all I want to do is select the term length. So this one happened to be a term 10. If it was a term 20 or any other length of term, we would just pick that particular form. But since this one's a term 10, I will select it. And then basically all we're doing is entering that renewal schedule. So I want to put in here in the name, though, I don't want to put just term 10. I want to put existing. This one happened to be an RBC term 10. And I could put something like your existing policy. And then again, I want to enter that renewal schedule. So again, coming back to our screenshot here, we can see 1665, 4433. These are each 10 years. So each time, these are the guaranteed renewals in there. So again, what we're going to do is we're going to enter in each renewal period in the form. So again, 16.65. Next renewal comes in at 44.33. Next one comes in at 95.85. And next renewal comes in at 340. Now you can see our software always gives you the opportunity to enter one more renewal, because again, depending on the age of the client, there's going to be different options. But again, when you get to the end of that renewal schedule, just stop. The other thing is I've entered in monthly premiums here. So this was his premium per month. Again, you can either do 1665, and you could actually do math in here, so you could say times 12, and it would do that. The other thing you can do, and so I'm just going to put that back in there, is you could indicate that this is just a monthly premium, and we'll do the math behind the scenes. But so I'm going to leave it this way. So I'm going to say 1665, put in that full renewal schedule. Again, we know from that detailed sheet that this was renewable till age 80. Convertible to age 70, and had an issue date of 19th of April 2005. So again, I just want to select that, April 19th. And again, the other, again, the important thing about issue date is we know based on the issue date and today's date how much time to take off each policy. Now, the other thing that I really want to highlight is there is a checkbox here at the bottom for Save As Policy. And again, if you're entering this for the first time, what you want to do is, you do have to enter the renewal schedule, but if I click Save As Policy, it'll save all of this to the client file, so I never have to enter it again in any other renewal. And again, I'll hit Save. Oh, and it's looking for a policy number. So I'll just give it 1, 2, 3, 4, 5, 6, because again, I removed this one. And I'll hit Save. Now, as I said, because I've hit Save as a policy, if ever I need to go back in and see this client's policies or maybe review this to another scenario, I'll just show you. If I go to the client file here really quickly, close out my account settings, you're going to see any policies that I've done are over here. Any cases that I've done are over here. And again, I can really quickly import that again if I need to create a new case off this existing policy here. So again, I can do that. Now, what I want to do is I've got this existing term 10 for $250,000. What I want to do is I'm going to do a term conversion. And again, I always like giving options, so even if I want them to consider a certain one, I'm going to say, let's search Universal Life here for 250. So again, we've got our 250. We'll search at their current age. We'll assume no backdating. And we can add any different product from the list here. So I'm going to add a BMO because it's right at the top. I want to make my term conversion look as attractive as possible. And again, even though my client here is 42, again, I'm grabbing this from a real renewal schedule. This works really at any given age. Now, I'm also going to add a whole life product here. I will pick a Equitable Life Whole Life, and all I'm going to do is I prefer bringing over the spreadsheet. Again, you can also search the rates and bring in guaranteed values for whole life as well. I like using the spreadsheet though because it gives me some control over the different dividend options. So all I'm going to do here is go into my Equitable software, and I'm going to design something for $250,000. And again, this would be a great place if you design the layered plan in here, or even use a different dividend like their economy one. We could certainly do that. And again, I think that 43 was what I said. Age near is 43, so we'll keep that apples to apples. We'll say 43. So again, I've just designed a 20-pay $250 for a 43-year-old male, and what I'm going to do here is just make sure I don't have anything else on here. No extra deposits, no riders, though if we did want to put these in, all of these we could do. Basically, all I want to do, and I'll just go back really quickly if you're watching it for the first time, is we want to view the spreadsheet. So whenever we're importing from a spreadsheet, all we have to do is say view, and it gives us basically our premium costs and all our values. And then all we have to do is, again, say export to Excel. And again, it always gives us that warning message. Again, gives us our digital fingerprint. Now, as always, you can either save the whole spreadsheet, or my preferred method here is selecting everything, and I'm just doing a copy and paste, basically. So I've just copied this information. I'm using a laptop and keyboard shortcut, so you can't see it on screen. Again, you can always save the entire spreadsheet. And then I come back and in this case, I'm using the paste spreadsheet method. Again, if you're watching this for the first time and you're thinking, that's a little bit confusing, again, you can always ask us on our live chat for help. We also have a guide for each different company in our help center. So if you're confused on any company's import process or where to find the spreadsheet, just pop into the help center. These step-by-step guides will help you. But again, I'm just going to come back here. Now, again, we've got our existing Term 10 and our term conversion options. And again, this is going to be a great case to take a look at. Again, because we've added something permanent, we've pushed out this time frame to age 99. And again, we might want to play with some of our report components just to kind of simplify this case. If it's not corporate, I'm going to take out credit to the CDA. I'm not going to look at internal rate of return on cash value. I may leave in the insurance benefit one just to take a look, and I'll take out these equivalent IRRs. Unless they come up, then that's when I might use them. Those are more used by our kind of estate planners. So that looks good. I'll take out alternate investment here because they haven't gone there, and I will generate the report. So here's our little handy side generate. That's the same as the button at the top here to generate a report, just on the fly off that handy shortcut bar. So let's take a look at a typical term conversion. Now again, I don't know necessarily about your clients, but if you have a particular age bracket that is very popular amongst your clients, that I think usually the stat people say is that advisors generally sell plus or minus 10 years of their own age. So you might actually pick your own age and do a sample term conversion report on yourself for our next concept, which is going to be that emailer campaign that we're going to use this shared case in. So let's take a look at this case, and again, as I said, this is something we're going to be using as a campaign or as more of a generic one. So again, you feel free to make these for your clients, of course, but again, in setting up our campaign for the next concept, we're going to be using this case. Again, I've got a nice mission statement in here, and then when we come down to the premium schedule, again, a couple really important things to note, especially about existing policies. And again, one of the things about an existing Term 10 is because it comes up to its renewal, and this one, in fact, because it was issued in 2005, has already passed a renewal point. We can see it's already in that second renewal, and we have only 8 years left on it. And again, you can see coded in red, so it's more cautionary. Now again, as we've been doing all webinar, let's take a look at some of the visuals here. And again, these are so powerful because again, one of the biggest objections to whole life is the cost initially, and people just focus in on that high cost. But they don't always see that the road that they're currently on, again, may also have a high cost. It's sort of a reverse chart if you were to look at it, and again has kind of the reverse area there. So again, if we think about when do we want our insurance to end, well, our current policy is going to expire here at age 80. This one, we're going to stop paying for at age 62. This one, we're going to have to pay for life, but it's never going to get as expensive as the term. It's never going to be as rock bottom cheap, but it's a slow and steady wins the race kind of thing. And again, when we look at the sum of premiums or our cost, again, it's reflected. I mean, the break-even point on a UL is only in 30 years, so at age 72, well before life expectancy. Even this expensive whole life, again, even well before life expectancy, here's age 79, becomes more affordable. This one expires, we have no more insurance. This one keeps going all the way until age 99 when we stop paying premiums for the permanent plans. Again, huge thing here is, again, asymmetrical dominance. So one, the expensive term makes the other two look affordable in comparison. Two, the other one, it's giving an option. And it's, why is this one green? What's better about this plan? Why do we put in all this extra deposit in the whole life product? And again, that's going to be the cash value. And again, this is another very visual chart that really helps emphasize value. So again, here red is cost, what we've deposited. This is a guaranteed schedule, so we know we will pay no more than $151,000. The projected total cash value in this on the current dividend, at the same period at that 20 years, we would have $237,000. And again, we can also show things like guarantees. So we can actually guarantee this client that they would get all of the premiums back should they cancel. And again, we can see, again, because it's guaranteed 151, we could actually guarantee them their premiums back in year 25. And that's very powerful. Now, we probably wouldn't sell entirely on guarantees. We'd say, there's likely going to be a total cash value. If not, it's going to be some form of reduced. And again, I'm just using these interactive legends to kind of toggle on and off these different values. But again, these are going to be really important for your client to interact with, especially when we share this case in, say, an email campaign. Again, insurance benefit growing. Big thing here, watching that kind of paid up addition at work, especially for someone, a client this young. And again, if this was still too much, if you still thought this price point, again, there's lots of ways we can reduce the cost of this whole life. It could be an enhanced dividend schedule, mixing some YRT in there. It could be term riders. Lots of different ways we can make that more palatable if cash flow is a problem for a full conversion. Again, real nice outline of costs. What cost do you want to be if you're going to live till 90, 165, 128, or 151? And for the 151 here, again, what kind of extra living benefit is there? The fact that there's a living, like a cash value that we could extract from the policy, whereas the other two don't necessarily have any value. And again, if we look at our insurance benefits, we can see, again, the growing insurance benefit. This product, actually, if we're taking age 87, grows up to be $1 million of insurance, and that's going to fight against inflation very well. Again, that's the current scenario. We can always drop reduced scenarios as well. Again, IRR, that's the thing we want to really focus on, and having a better IRR at life expectancy is going to be really important if this is going to a CA. And again, this is a big spread over this IRR, so it really makes this whole life plan look attractive. And again, nice plan. Now we can look at, again, reduced examples too, is just in case the dividend doesn't perform, and contrast that as well with those interactive charts. So it's really nice for transparency. Now, if this was the kind of case that we wanted to share with our clients, again, we could do it on an individual basis, or we could set up our next concept as a term conversion campaign. So what I'm going to do is the first step is, again, of course, create the report, and this one dovetails into our report nicely, and I'm going to say share. Now, when I click this share link, it creates a unique link to this case. I can then send this to either an individual client, in which case only they have the link. All the stats on this case are going to be for this individual client, or I could send it to a group of clients. Either way, all I have to do is go over here. It creates the unique link once I've clicked share. Again, I can always unshare it, and all I have to do is copy it. Now, the other thing I can do is I can actually request certain information, like such as first name, last name, email address, phone number. I could even require their date of birth. So perhaps if I'm doing a term conversion campaign and I say I want to know, if you want a current quote on your conversion options, I could require the date of birth. So they'd have to enter that so I could actually make a quote for them if they go through the process. For me, I'm going to say require first name and last name. One of the updates this month is actually requiring a reCAPTCHA, so no robot could actually do it. You'd actually verify it's a human. But anyway, I'm going to put just first name, last name, and I'll require that they give me their email. And again, I'll update that case link. And again, this case link will actually stay the same once I've updated it, but the important thing is I've copied it. Now, I talked a little bit about sharing this with an audience. So if I give this link, I could email this to an individual client, as I said. But what I'm going to do is I'm going to go over into my MailChimp here. I'm going to log in, and I'm going to go into a template. Now again, I've got this template set up as a shared one. So if you would like this template that I'm about to use in this mail campaign, all you have to do is shoot me an email, charlie@lifedesignanalysis.com. Again, if you paid attention last couple months, we did a charitable gift, a cascading. This is going to be a term policy review. And what I've got set up here is, again, just a generic template. You guys could put your logo in there. I've put a nice banner there for you, and I've put a little bit of information on term conversions. And again, you can feel free to edit this text. I just put this in as placeholder text. So it says, I want to share some information on an extremely valuable option you may be interested in exercising with your term life insurance policy called a term conversion. And again, I'm going to go through and edit just a little bit here and save that. So again, feel free to play with this text. Now, I put in a little bit of information. So what is a term conversion? I start off with just the basics of term insurance. And so I say a term life policy is as a set length of time where the policy has a guaranteed price and insurance benefit. After the defined length of time is up, the price increases, also on a guaranteed schedule in your contract. However, generally at a substantial increase in cost. A term policy generally expires at age 80 or 85, and the most popular forms are 10 and 20-year term lengths. But again, we want to make sure they know that they're all different. A term conversion allows you to change from a term policy, something temporary, to something permanent. No expiration age as long as you pay the premiums. Its main advantage is that you do not need medical evidence, and I might put medical evidence to change policies. Types. And then I just put, many people assume at the end of their term length they'll be healthy and it'll be easy to get an offer from an insurance company, but this is not always the case, making it a risky strategy. So I give a little bit of pros and cons about what is a term conversion, because again, we use a lot of jargon, so it's important to give clarity. Then I put down some benefits. So what are some benefits? No medical required. You retain your health rating from when you applied or when you got the term policy issued. So again, I put in just a little kind of seed crumb for anyone whose health has changed. So fantastic option to consider if your health has changed. You guarantee your insurability for life as long as you pay the premium. Most times, it's the more affordable option if you need insurance in place at the time of death. Most people do, even if just for final expenses. And then the purchase of a permanent life insurance at younger sale achieves a lower insurance premium cost than if we're to do it later. And then most permanent plans allow you to build tax advantage cash value as a growth option or as part of the plan design. So again, I put a little breadcrumb about cash value. Again, of course, you could use a term conversion with min funded UL and have no cash value, but again, it gives you the option to do so. Now at the end here, I just put in a kind of a case study. So I just put this: consider John, a consultant, buys term insurance policy at age 45 in good health. However, over the last 5 years, due to his workload and lifestyle, has gained a considerable amount of weight. He has 5 years left to renew at age 50. However, the likelihood of him being rated or an increased cost due to health risk and the increase in his age means that he might not be able to purchase enough insurance coverage to cover his liabilities due to the increased cost. He has the option to convert his temporary term insurance into participating insurance at his current health rating on his term policy of standard. Tom is a real client. I've changed the name but included a link to his real life example. We recently helped him convert his permanent insurance at standard health risk. Take a moment to view a sample term conversion and please contact me to see your personal review. And then here where it says view a typical term conversion example, or what's called the call to action, this is where I want to link the web address to that shared case. Because when I send it out to everyone, they're going to be able to click the case and view the example. Then again, I've left an area here as a second one, contact me for your personal term review, and this is where you would put your own email address. So I leave it blank, and I leave even the signature blank here, so you can put in all your own information. You can put your own logo at the top. But again, let's just preview this and see how it would look if we were to send it to a client. So again, this is how it would look on their desktop, on their mobile, or in their inbox. And again, they can take a look at this kind of comparison, go through what a term conversion is, and then when they get to the bottom and they're curious, they can click to view a sample case. Now, when they view this case here, they're going to have to log in. So I had to enter my first name here, so I can say Charlie Conron, phone number, and I also had to include my email, and I'll just include my life design analysis one. Then I'll say proceed, and you can see there's areas for date of birth, and if we had asked for a CAPTCHA, they'd have to prove that they were a human being, not a robot. And that's a good one to use if you're on social media and just want to make sure all the views are human. Again, we've got our report. We can go through it. It's all designed, again, now instead of the last case ones, it links to our website, and we can actually see this term conversion case. Again, interact with all the different charts. And all the different legend items. And again, once the client views it, and again, I haven't looked at this one for very long, but I'll get out of here. If we go back to our design of this case, for instance, we're going to be able to see those reports. So that's another idea. You know, we've done a couple on the shared cases, but this is a great idea on how you can put it out to someone. Again, we can see the time they visited, who viewed it, and how long each visit is. Again, if they made any comments. So again, that's a great way to spread the word about term conversions. Hopefully it gives you a few ideas on how you can service your existing policyholders, how you can approach new policyholders, no matter what their income level or ability to pay or cash flow is. So thanks so much for our webinar. We had a few updates that we wanted to share with you this month. Most of them are just very simple. So one of them was we've tried to make the manage clients area a little bit easier to read. So we've pushed out, we've kind of condensed the needs analysis into these nice little icons and pushed out the size there. One of the other things was adding a reCAPTCHA to a shared case. So if I go back to that last shared case here as an example, I can show you what I mean by that reCAPTCHA on that shared case link. So all I have to do is check this box, update the case, and again this link here, and I'll just open this in a new incognito window. You'll see that now I have to prove that I am not a robot. It may ask me to select all the squares with street signs. And I'd have to answer them and say next. Verify. Again, verifies I'm not a robot, and I can put in the rest of the settings that I've requested. So depending on what you're looking to achieve, that's one great way to post some of these examples on social media. Because while I set up this term conversion campaign as an email campaign, there's no reason we can't use concepts like these to put examples on social media. So thanks again for watching, and look forward to your comments and feedback. Take care.